Good morning, gang. My name is Phil Grady, philsgang.com. I'm here to answer your question, what do you think the market's going to do? Okay, so this is November 2nd, 2022. This is the day they're going to announce they're going to raise interest rates 75 basis points. But you know that already. What are they going to do going forward? That's the question. Well, if he's serious about killing inflation and getting inflation under control, then what they're going to have to do is bring the Fed fund rate from 3.25%, where it is now, to 5%. The only way you're going to beat down inflation. And what's the Fed fund rate? The Fed fund rate is the rate at which the Federal Reserve prints money and then gives it to your local bank and charges them an interest rate of 3.25% to 3.50. And then when you go buy a car or a house or whatever, then they take that 3.50 and they boost it up to 5, 8, 10%, whatever. That's how they make their profit. So the Fed fund rate is what you need to raise to kill inflation, okay? Because you have to dampen demand. You got to stop demand. Demand has to be, killed. Now, that's only if they're serious. But I don't know if they're serious about it. Because, remember, the reason for all this inflation, it was done purposely, okay? Because it was done purposely based on the fact that after the 2008-2009 crash, the asset class, the very, very wealthy, wanted to claw back all their money, and they needed inflation to do that, to push up their assets. And, of course, Congress wants inflation because it helps them pay down the debt they have to China. In other words, when you have inflation, our dollars go down in value, and that means our debt that we owe to China goes down. So the rich benefit, and, of course, the government benefits. So there was no seriousness there to stop inflation. So what is going to happen going forward from here? I believe if they don't have the guts to continue, pushing inflation higher to create wealth for the wealthy and to keep tamping down the amount of money that we owe China. And I think they're going to let this go, push these rates up to 5.25%. Now, the thing with the stock market is, if you look at the stock market here, I come over to my chart, look at that downtrend you got. So whatever happens, we're just going to have volatility. All these drops right here that you see, that's nothing more than the big institutions, the big hedge funds, they're shorting the market. They've been shorting the market. They shorted there, they shorted here, they shorted here, they shorted here. That's all shorting, okay? And what happens is we get these big snapbacks when they convince everybody to buy on a dip. You get these big snapbacks, because if I'm shorting the market and all of a sudden I know everybody's going to come in buying a dip, I'm going to take that profit. If I made 10 grand from here to here, I want to take that 10 grand. And so I'll buy my stock back, and then she goes back up. And these big rallies we've been having is all that, okay? It's all about the big covering the short positions. After we have a big drop, cover the short position, cover the short position, cover this is where we are now, cover the short position. But they're not going to break out of the downtrend. And the reason they can't break out of the downtrend, okay, because unlike back here, they broke out of the downtrends very easily, because if you look back here at the 2018 crash, we broke out after 11 weeks. 2020, we broke out after 4.5 weeks. And here we are, 44 weeks, and we still can't break out. They broke out because they had on their side QE. There's no more QE. Okay? So, and the reason there's no more QE is because the Federal Reserve has no more room to print money and to put and buy treasuries to put on their balance sheet. So the long-term rates go down. They can't do that anymore, and that's why this downtrend is in trouble. The other thing is, I believe that we're going to see the market go much lower because, as I said the other day, stock valuations are way too high. And to get the stock valuation down, when this market dropped, Okay, down 23%. When that market went down like this, 23%. It should have went down another 20 to 30% to get the valuations of stocks correctly. They're way overvalued. So I believe we're going to have a lot of volatility today on the announcement, and then it'll all settle down. Then they'll rally it towards the election, and then we'll come right back down again. Then we'll get another rally, come right back down again. Exactly what we'll be doing all the way back here. Okay, so that's what I think is going to happen. So we'll see this afternoon, and I'll just see you again tomorrow morning and fill you in on what's going to happen with the market. Hey, in the meantime, don't forget, November 12th, 12 to 3 p.m., sign up for my webinar. Now, if you can't make it November 12th, that's no problem because it's archived for 2 solid weeks. It only costs $99, and to sign up, just go to myphilsgang.com and sign up at our gift shop, okay? So there's your answer. What is the market going to do? A lot of volatility today, probably another rally tomorrow, and then we're going to go right back again down. All right? See you on the chart.